The Central Bank of Kenya, CBK, projects that the economy will grow by 6.3% in 2019, driven by favorable performance in the tourism and agriculture sectors. The CBK also sees room for mitigating debt pressures through refinancing maturing loans with longer and cheaper credit. Of interest, CBK holds a favorable outlook on the banking sector despite the constraints of the interest rate regime. The central bank is optimistic about prospects of the banking sector in 2019, even as the country remains entangled in debate on how to chart the way forward regarding the interest rate regime. The market regulator says despite prevailing headwinds, key indicators in the sector point at a broadly stable environment, provided banks guard against reckless lending.
The efforts that the banks mounted last year to deal with, to deal with the non-performing loans, or let's just say loan recovery, are bearing fruit. You can already see that there's some benefit there in terms of the NPL ratios coming down.
The CBK is also wary of the perception risk attached to the country's banking sector following involvement of lending institutions in graft. In November 2018, the central bank upheld its decision to impose a 393 million shillings fine against 5 banks following their involvement in cash relating to the National Youth Service scandal. The market regulator says it is working to avert rising risk in this regard.
In the context of the so-called NYS2, we worked with various institutions, banks, and continue to work with them to strengthen their AML-CFT frameworks. That obviously will continue to reduce the reputation risk for the jurisdiction.
The CBK has also reiterated its position that voluntary consolidation by commercial banks, as has been witnessed in the recent past, is a welcome step in helping to strengthen Kenya's banking sector.